Still a good time to buy energy. Our next guest says yes, even with the rally in those stocks, saying while energy is the best performing sector year to date in the S&P 500, it still has not kept up with the commodity price. Let's bring in our friend Andrew Slimmon, Managing Director, Senior Portfolio Manager with Morgan Stanley Investment Management. Andrew, good to see you. Why haven't the stocks kept up with the commodity price? Explain it in terms that I, as a freshman, might understand.
I think it's, well, hi, Tyler. I think it's behavioral, right? You realize these stocks and the ETFs were down nearly 90% from the 2018 high. That creates a lot of anxiety. And I think that's why they have lagged on the upside, is simply they went through a horrible time. But what I find fascinating, Tyler, is can you remember a time when a sector was up this much on the year and so little is discussed about it? Ultimately, investors, there's the fear to greed cycle, and we just don't have enough greed, and I think people will chase momentum. So I think they have lagged the commodity because of the carnage that happened in the past, but that really creates the upside. They can reprice still higher than they are today.
And you see, we just showed that it's up 45% year to date. I wonder, though, if part of the explanation is that investors and fund managers and endowments and so on and so forth are wary of investing in this sector for ESG reasons. Could that be part of the reason people are holding back?
Yeah, I think that's a big issue. But don't forget, those ESG investors, they are benchmarked against many times the S&P, which has energy, or MSCI World, which has an energy portion in it. And so when it's a small part, it's no big deal, but the pain becomes greater as the price moves higher. So I could have made that article, at the beginning of the year. Oh, I won't do well because it's not an ESG, but it's up 45%, Tyler. So I think the point of this is the more it goes up, the more it's going to force people that maybe looked away from it because it wasn't ESG to actually realize, gee, it's hurting my performance relative to my benchmark. I better get in.
What happens when?
And look, there's good yields in these stocks.
The yields, the yields are
dividend yields.
Yeah, you're getting paid to own them. I mean, it's a very nice parlay there. Let me ask you this though: there'd be a lot of people who would say, "Well, I probably missed the run, and I shouldn't get in now, and it's gotten away from me, and so forth." What does history tell you about what happens next when a sector gets as hot as energy has been? Does it continue? Does it cool down? Does it break? Does the fever break? What?
I think if the crude gets to 90, 100, I'm not going to be here, telling you, Tyler, I think you should buy the stocks. But I do think that these stocks have lagged, and so there's quite a bit of upside. The other thing I think is important to consider, Tyler, is look, I'm a core manager. I am a believer that, as we just heard our president speak, the economy is going to run hotter. You hear Powell yesterday, you hear the president. I think there's a lot of emphasis on creating a hotter economy. And in that environment, you want more inflationary sensitive assets. So we have tilted our strategies more towards value and then growth. And financials have gathered a lot of interest. We have a lot of them, but a lot of money is poured into financials. I don't see as much in energy. So I think I am waiting for the time when there's a lot more enthusiasm, Tyler, when you're talking about energy stocks a lot more than you have been in the last few months. And I think that will come as we get closer to triple-digit prices on crude. And in that environment, I think these stocks will do very, very well. So I don't think it's too late.
Which you expect, it appears. I know Chevron finally is one of your choices. You have another one, PSX, that's the ticker symbol. Why do you like that one?
Yeah, that's right. Yeah, it's a refiner. How many refiners are we building in the United States today? None, right? And so I think EV, electronic vehicle, I think the Biden administration is actually good for the oil sector because it's forcing the oil sector to be more capital efficient. The drill baby drill is behind us, and I think these companies are operating much more efficiently. And that's actually going to cap the kind of the opening of supply. So I think the environment's ripe for this group to continue to outperform the market.
Shepard Smith here. Thanks for watching CNBC on YouTube.